Thursday, April 24th, 2025. And welcome back, everyone, to your daily financial download. Quite something today. This is actually our 25th installment.
It really is. 25 already. Feels like we just started breaking down these markets for you.
It does, doesn't it? Time flies. Anyway, let's get straight into it with our financial fact of the day. This one's from the RBI.
Yep.
For the financial year 2023, the household financial savings rate in India, it came in at 10.8% of GDP. That sounds, well, significant.
It is quite significant. Yeah, think about it. For every 100 rupees generated in the economy, nearly 11 rupees were saved by households in financial assets.
Yeah.
It really points towards a kind of cautiousness.
Cautiousness, like people holding back a bit.
Exactly. Maybe waiting out some of the economic uncertainty before, jumping into bigger investments, like hovering over the buy button, maybe.
Got it. Okay, so speaking of markets, let's see how things closed today. Based on the 3:30 p.m. IST data, the Nifty 50 closed at 24,246.7 DAI. That's down 0.34%. Bit of a dip.
Yeah, a mild correction, you could say. Seems like some profit booking, especially in the larger cap stocks after their recent run-up.
Makes sense. Natural ebb and flow, right?
Pretty much. You can't go up forever.
And the mid-caps. The Nifty Mid-Cap 150 closed at 20,194.40, down just 0.17%. So a smaller dip there. And Nifty Small Cap 250, even less, ended at 15,915.25, down a tiny 0.05%, almost flat.
Right, so the selling pressure was maybe a bit more concentrated at the top end today.
Seems like it. Looking at the whole picture, the Nifty Total Market Index closed at 12,468.55, down 0.23%. So that cautious sentiment you mentioned earlier seems to be playing out across the board.
Yeah, it really ties it together. Investors are just digesting things, lots of global cues, domestic factors. Bit of wait and see, perhaps.
Okay, let's switch gears. Fixed income and currency. The 10-year government bond yield, it ticked up a bit to 6.429%. That's up 0.098%. What's the story there?
Well, usually when bond yields rise, it often reflects worries about inflation creeping up or maybe expectations that the central bank might need to hike interest rates down the line.
Okay, so lenders want a higher return if they expect inflation to eat into their future earnings.
That's the basic idea, yeah. Compensating for that potential loss of purchasing power.
Right. And the rupee versus the US dollar?
Pretty stable, actually. Closed at 85.6593 INR per USD. So not much drama in the Forex market today.
Interesting. So balanced supply and demand there, for now at least?
Seems like it, yes.
All right, let's move to some key news headlines. First off, something on the government's finances. The fiscal deficit for FY24 narrowed to 5.8% of GDP.
Yeah, that's better than the revised estimate, which was 6.4%. So definitely a positive signal.
What does that signal, really? Better management?
It suggests improved fiscal management, yes. Maybe better tax collection or controlled spending or both.
Yeah.
It could potentially mean less government borrowing, which is generally seen as good for the markets.
Okay, good to know. Next, the RBI kept the repo rate steady at 6.5%. No change there. Why hold steady now?
Well, it's that classic balancing act, isn't it? They're trying to support growth, but they've also got to keep inflation in check. Holding the rate suggests they're perhaps comfortable with the current situation, or maybe just waiting for clearer signals before making a move either way.
Right, watching the data closely. Now, commodities. Gold saw a big jump up 1.2% to $1,980 an ounce. What's driving people to gold?
The classic safe haven appeal. When there's global economic uncertainty or geopolitical tensions flare up, investors often, flock to gold as a store of value. It seems we're seeing a bit of that anxiety playing out.
Okay, but interestingly, while gold's up, crude oil is down. Fell 0.8% to $82.50 a barrel. What's happening there?
That could be down to worries about global demand. If economies are expected to slow down, the thinking is that demand for oil might soften. Plus, reports of rising inventories can also push prices down.
So opposite forces at play compared to gold.
In a way, yes. Gold reacting to uncertainty, oil reacting more to growth expectations and supply-demand dynamics.
And quickly, across the pond, the U.S. Fed. What's their latest signal?
They're sounding cautious about more rate hikes, emphasizing data dependency. Basically, they want to see convincing proof that inflation is truly cooling before they tighten policy further.
So every U.S. data point is going to be watched like a hawk?
Absolutely. The markets will be hanging on every release.
Okay, lots to digest there. Before we break down what this all means for you, let's just take a very quick moment for an important message. Hey, are you trying to navigate the real estate scene in Ahmedabad or Gandhinagar? It can be tricky, right?
Well, you need to check out Ahmedabad Real Estate Review. Seriously, it's a fantastic podcast by our friends at Audiocast Lab India.
Oh yeah, I've heard good things about that one.
It's brilliant. Whether you're looking to buy your first home, trying to find the perfect rental, or you're an investor looking for opportunities, this podcast is packed with insights. They cover everything: market trends, policy changes, deep dives into specific areas, practical tips.
Stuff you actually need to know. Exactly. It really gives you an edge. So stop guessing and start getting informed. Find Ahmedabad Real Estate Review wherever you get your podcasts and give it a follow. You won't regret it. And we're back. So let's try and piece all this together. We saw the markets dip slightly, bonds yields up a touch, RBI holding steady. What's the overall picture?
Well, it feels like the Indian equity market is in a bit of a consolidation phase. Like it's taking a pause, catching its breath after a period of gains.
So investors are just waiting, watching.
Yeah, watching those global cues we mentioned, keeping an eye on domestic data releases, basically reassessing things before making big commitments. It's a period of careful observation, I'd say.
Okay. Let's zoom out a bit. Macro picture. Any good news? I saw something about inflation easing.
Yes, that's right. The CPI, the Consumer Price Index, for March 2025 actually came down to 5.2%. That's definitely a bit of relief. Suggests price pressures might be moderating slightly.
Which the RBI would certainly like to see.
Absolutely. It gives them a bit more breathing room.
And looking ahead, the monsoon forecast. I heard it's predicted to be normal. Why is that such a big deal?
Oh, it's huge for India. A normal monsoon is critical for agriculture, which, employs a massive part of the population and drives rural demand. Good rains mean better crops, better farm incomes.
Which then boosts spending across the economy.
Exactly. It's a really fundamental driver for economic health in India. So a normal forecast is very welcome news.
Okay, let's quickly touch on specific sectors. How's IT looking?
It's actually showing quite a bit of resilience. We've seen some strong quarterly results coming out, often beating expectations.
Driven by?
Continued strong demand for digital transformation services globally. Businesses everywhere are still investing heavily in tech, and Indian IT firms are capturing a good chunk of that.
Okay, and banking, particularly private banking.
Still looking quite healthy.
Mm-hmm.
Good credit growth, which means lending is strong, and importantly, asset quality seems to be improving, fewer bad loans. That's a positive sign for the bank's financial health.
Okay, but it's not all smooth sailing, is it? What about FMCG, fast-moving consumer goods?
Yeah, they're facing some margin pressure. The issue there is rising input costs. Raw materials are getting more expensive. So even if they're selling decent volumes, their profits are getting squeezed.
So they need to manage costs carefully or maybe pass some of that increase on to consumers?
That's the challenge they face, yes, finding that balance.
Okay, so pulling all these threads together, the cautious market, the inflation news, sector performance. What's the key takeaway for someone listening right now? What's the investment strategy thought?
Well, in this kind of environment, diversification remains key. Don't put all your eggs in one basket. Focus on companies with strong fundamentals, solid balance sheets, and clear growth potential for the long term.
But maybe be a bit cautious short term.
Exactly. Given the global uncertainties, the Fed's stance, geopolitical risks, oil price volatility, a degree of short-term caution is probably wise. But the long-term outlook for well-chosen Indian equities still looks pretty positive.
Right. So just to quickly recap today, Indian markets, slightly lower on profit booking. Bond yields nudged up on inflation worries. Rupee, nice and steady.
A mixed picture, really. Highlights the need to stay informed.
Absolutely. And on that note, let's wrap up with our quote of the day. It's from the legend Warren Buffett.
Always good.
He said, "Risk comes from not knowing what you're doing."
So true. Knowledge is key in managing risk.
Powerful reminder, isn't it? Always understand what you're investing in. No, just the usual reminder. Everything we've discussed here is for informational purposes only.
Definitely not investment advice.
Please, always consult your own financial advisor before making any investment decisions. They can tailor advice to your specific situation.
Essential advice.
If you enjoyed today's breakdown and want to keep up with these daily insights, please do hit that subscribe button wherever you're listening.
It helps us keep bringing you this content.
And if you have questions or want to discuss anything further, you can always reach out to the team at SOS FinWell on LinkedIn.
We'd love to connect.
Okay, that's it for our 25th Daily Brief. Thanks so much for tuning in and being part of this. Have a great rest of your day.
Take care, everyone. We'll be back tomorrow.